Cool. Hey, what's up? What's up? This is your boy Ronald. This is your guy Romaine, and we're here to come back with another episode of High Podcast. Romaine's gonna be smacking on a sandwich as we're discussing what we have to discuss today. And today's topic is gonna be about the psychology of investing. So, hey, welcome back, Romaine. I see you smacking on a turkey sandwich. That's what you said before this podcast. How's it going?
Thank you. Thank you. It's going okay. I'm literally in the midst of a transaction, so it's one of those, that exciting time of trying to get the loan stuff figured out and all that. So,
Oh, nice. That's what's up, man. That's what's up. Yeah, I've been in between different things. Been reviewing properties and stuff. Still have the goal in mind to fully, really, move into move into the next property that I'm looking into for like a live and flip. So, yep. Other than that, I'm by myself for like 3 weeks, so I'm gonna have the family with me. So
party, party.
it's gonna be interesting. I'm gonna get a lot of stuff done.
That's what they all say. If you need a yard to cut, I got you.
Oh, okay. I just cut my yard yesterday too.
Oh, so you're ready. You warmed up.
I'm already warmed up, man. I got to build out this furniture. I gotta do some other things, but yeah, see some movies too. Shoot. Yeah. But yeah, let's get back into it. So I want to discuss in this particular podcast, the High Podcast, is the psychology of investing. I have a little bit of background from a Udemy course that I did and some trading and stuff. And going over to like the behavior of why people trade the way they trade and why certain movements happen. And so I'm somewhat versed on a little bit of like the biases and the theories and stuff in regards to investing and why people do this certain things they do and the behavior and the mental behavior behind it. But yeah, how you what's your background so far other than like your personal experience?
Uh, when you say like background and what specifically?
Just like psychology of investing.
I mean, I've taken a class in psychology, but nothing specific to like psychology of investing. Most of what I have is just real world experience. So,
All right, cool. All right. So we're gonna be bringing up some terms and we're gonna see what's gonna happen and see how you feel about that.
all right.
Cool. All right. So one of the things I want to break up for sure is, this particular thing. A lot of gurus talk about it, and usually it's trying to sell you a course or sell you a dream in a sense. But they talk about the abundance and the scarcity mindset, and pretty much for the most part to get you to buy the course is like you got to think of an abundance of how you're going to be investing yourself with this course or something. And yeah, I definitely hear this term so many times, and for the most part I definitely have my opinions on it. Yeah, so what is your ideal, and maybe we can probably define this. What is abundance mindset and what does that mean?
I mean, I haven't had anyone define that for me. I would guess, and you could tell me if I'm wrong, but I would have guessed an abundance mindset would be that there's plenty of investment options for everyone out there.
Mm, yeah, I mean, most definitely, it's like it's always opportunities, and there's a never ending supply optimism about the future for the most part. And then like scarcity is probably on pretty much on the opposite spectrum with that. So scarcity is like, hey, I don't know what I'm gonna have tomorrow, so I'm just gonna save what I have, and oh, because everything looks gloom in the future. So I'm gonna penny pinch. I'm gonna save. I'm gonna not put my money into anything risky or anything. So because I don't know how those things work.
Okay, okay.
Yeah.
So you're saying it's a mindset that would drive how you invest.
Hmm.
Okay.
Yeah, and people usually, talk about this abundance mindset and in the ways of, hey, you have a lot of money. you can do what you need to do to attain more money. So why not spend that money now and not worry about tomorrow? And it could be so many extremes on this. Like I think for the most part, you can have a sense of both. The scarcity is like, managing your risks. The abundance is like, hey, don't let anything stop you from keep going. Try to overcome the obstacle kind of thing. And I kind of wanted to bring that up because I think it probably is pretty pivotal to understand when to switch in between two kind of like mindsets. Because one of the phrases that I heard from a very well-known investor that pretty much I follow by to this day, how he goes about doing investing, which is like Warren Buffett. One of the things he says, invest in the streets when there's blood in the streets, and pretty much even if it's yours. And pretty much what that means is that, hey, when the market is down, that's when a lot of people are not going to be down there. So buy during that time, and be optimistic that essentially it's going to go back up, because most of the time, and this is probably going to go into some other topics, such as like the herding behavior mentality. So, this is one of the topics I want to discuss about psychology of investing. So pretty much, humans had the tendency to follow the crowd, assuming that majority cannot be wrong if like they all choose this particular path. And we've seen this pretty much as in recently with like the cryptocurrency bust and bubble kind of thing. Everyone's like, yo, cryptocurrency is the future. Cryptocurrency is going to be the wave kind of thing. And so a lot of people put a lot of money into it. I know a lot of people in the tech community put well over 1/3 of their portfolio into that cryptocurrency. And they lost pretty much all of it for the
Mm.
most part. And yeah, it was just they thought since everyone was doing it, it couldn't be possibly wrong. But at the end of the day, it was it was a bad decision based off of that. And I'm trying to think, in other cases, when how can you really use this, and how you think about investing. So one of the things about advantage of this is, everyone's going to be doing it at some point. You could probably use it as a short-term way of making some gains, and get out and have an exit plan, and then that'd be it, because it's more likely going to be a bust. And that's how I kind of see that particular you know bias, that herding behavior bias kind of thing. So whenever I see that, I'm only thinking about short term in regards to this. Probably a couple of months, maybe a year, see how much of the trend is gonna keep it going. But I'm already putting my stops. I'm already putting exactly my exit plans on when I'm going to get out, and try to, exit out as soon as possible when those particular things I know is a hurting behavior.
Mm.
And have you seen anything like that before?
I I could say that for me, I don't have a lot of experience with like stocks, so um yeah, that's not something I have a lot of experience with.
Yeah, that's good, man. You don't follow the crowd, bro. Like I don't know you very much. You don't follow the crowd. You do your own thing, bro.
I play my game like Robert Kiyosaki said. I pick my game and I play it. And I try to
Yep.
get good at it.
Okay.
And
Yep.
my game is real estate and League of Legends.
Okay. Okay. See, that's what I'm saying, man. You do your thing, bro. Do your
One
thing.
one makes me money, one takes my money.
For sure, for sure. Yeah, shoot. I never got into League of Legends, but hey, we'll see one day, man. Like, I actually haven't played games in over 6 months, which is interesting. It's crazy. It's
That's why
crazy.
you're able to get your yard cut.
Yep, exactly. All right. All right. So I'd say another bias, and come on to look at it, is like loss aversion. So, and pretty much like this pretty much indicates that, hey, yeah, the thought behind this is that your losses can be felt more intensely than the gains that you equally have magnitude for. So like if you gain $300, you're like, oh, that's tight, cool. But when you lose $300, it's like, God dang, that hurts so much. I don't know if I'm gonna do this again. I just gained one 300, I lost. So it's a matter of like, you know, it's like when you have this loss aversion, it's pretty much suggests that investors are motivated to avoid losses as much as possible to achieve gains. So they might say, hey, I bought this stock and it went up like $50. Like, cool. I just bought it. Now, a week later, is it down $100? What in the world am I doing? In order to avoid more losses, because it just dropped like crazy, I'm gonna, sell this position early. But then all of a sudden, 2 months down the line, it went up 50 $150. So it's like, those type of things, playing into that. And we hear this over the long term is that, if you hold something for the long term, typically is going to gain. And typically these loss aversion bias essentially comes down to people who only really think of it in the short term. You want to get a quick find, you want to do that. Yeah, and it's a very difficult thing to handle sometimes. So yeah, it's like, I mean, other than telling people, hey, thinking on long term, like what can they really do to hold on to something, and even though they don't really feel great about losing money.
I mean, I feel like for everyone it's different. I imagine something that could help somebody resist the temptation to sell an investment out of fear of losing money would be to make sure that they're investing in a stable financial position. So to speak, they're not using the money that they need to live on a monthly basis to pay for their investing.
Hmm.
So I think Dave Ramsey has like a hierarchy of financial advice where he starts off by saying pay off high interest debt, then pay off um and do company matches on your 401ks if your company offers one. Um and then go into saving for emergency fund. And he gives some recommendations on that. And once you've gotten to a place where you have your emergency fund to cover any emergencies that would threaten your monthly budget, you paid off your high interest debts, which in a way are investments. They're just investments with a guaranteed rate of return equal to the interest
Hmm.
that you're paying off on that loan. Once you've gotten to a place where you have your monthly budget, you have your emergency savings to protect your budget, you don't have high interest debts that are eating away at your money, then you can have more tolerance for loss with other investments because
Hmm.
you're using money that you don't need to survive each month.
Most def-
Yeah, so that's one thing I think that would help with avoiding a mindset of loss aversion. I think another one would be education. I know you mentioned people have already heard like, ride it out, ride it through the losses, but I think education of how investments work can give you more power to weather the storm, so to speak.
hmm.
Understanding the power of compound interest, understanding the power of the ebbs and flows of the market. Yeah. So
And the different investing vehicles as well, because cryptocurrency was an investing vehicle for a lot of people in the last couple of years, but didn't pan out really well with them. So they feel like, well, I don't know if I'm gonna do that again. But you know, investment vehicles that you really familiar with, which is real estate. I'm very familiar with like the stock stuff and holding on to them and stuff. So yeah, like like you said, pretty much understanding the education and also building your foundation of your security of money will kind of set your mindset. It's like I'm secure at this particular level. Now I have this extra money. I can play around with this level because this is my foundation. Anything below that foundation, I ain't gonna be spending that. So yeah, I definitely agree with that. And then continue to build up from there.
yeah.
Feel cool. Blasting through this, man. Blasting. Okay. All right. So another, bias to take into consideration is the cognitive bias. And it's pretty much um, investors are prone to various cognitive bias, such as confirmation bias, loss aversion, what we spoke about, and these other biases and being overconfident kind of thing. So since we already kind of spoke about loss aversion, like confirmation bias and overconfidence bias, pretty much the definition of confirmation bias is, favoring information that confirms existing beliefs. So like, this information, so this has to be true. And then overconfidence is pretty much overestimating your abilities. It's like you gain this amount, so you're probably gonna do it again. And yeah, taking those things into consideration. And I definitely say I've been in this situation before when I first started doing day trading. And that was roughly around last year. And I kind of spoke about this a little bit, probably in the previous podcasts, but you know, I thought I had a nice strategy for, a couple of 2 weeks. I had set goals and stuff. Like, here's my goals. If I get 25 in a trade, then I check off that goal. If I get $50 in a trade, I checked out the goal. I think at one point I got up to $100 and I made a gain on a trade for $100. And it was like endorphins. Like, yo, that's crazy. I did that. Okay, let's do it again. So yeah, and I kept on going, and then it was like the very beginning of the year, and the market started making a turn. I was only doing long trades during that time. I didn't really think about doing shorting any trades, and I should have been. I should have been practicing that too on my little paper trading account, which I did some practice before I actually started doing, really day trading. But I never did, the shorting stuff. But pretty much long story short, I was still doing long trades when I should have been shorting. And I felt like I was very confident in making these high gains that I had previously. So pretty much at the end of the day, I lost $300 with my overall account out of $2,000. So came back with 1,700 at the end of, like, me say I'm done. That's my loss aversion. I said I ain't doing no more. I, but yeah, I might come back. I might come back. I ain't gonna let that loss be, playing in my head. I might come back when I, feel like I can spend extra money.
Mm,
Yeah, and that was pretty much like a little bit overestimating my ability, overestimating my ability to see patterns, which I thought I was seeing a pattern during the time, and I should have been switching up my strategy and being flexible and knowing different strategies. Now, I'm not exactly sure if there's any confirmation bias. Well, I would say crypto a little bit confirmation bias. I was thinking, all right, crypto confirmation bias was that, hey, pretty much the dollar was made out of nothing, really. It's pretty much backed behind the Federal Reserve and the gold and stuff that we have. And I was like, all right, if that can be backed by that, then who's really backing cryptocurrency? Like pretty much everyone individually. So I was like, all right, meaning as long as like no one has like overall crazy amount of shares or in a currency, then this could be, pretty stable. So I had my money in like Dogecoin, I had my money in like the stable coins like Ethereum and Bitcoin. Just in those three. I was like, I ain't playing around with those other ones. Donkey Coin, nah. I don't, that is too crazy for me. But I was like, all right, this could work. It's a non-central currency that possibly could work. But over time, didn't do so well. I still got money there, but it's like I'm not continuing to put in more than 1% of my money.
mm.
But me, I knew that much. Like as far as I'm not putting more than 1% of why I really less than 1% of my portfolio into that. So
That's good.
a little confirmation bias for me, but because I took that trading course, I know how to mitigate my risks.
That's good. Education.
Yeah, you have any confirmation bias on your side?
I could think of a couple examples. I mean, I know real estate is my main investment vehicle, and I've noticed that, if the definition of confirmation bias is looking at information that already supports your held beliefs, I would say a good example of that is home inspection. You know, I think to some degree, when you want the property for the money that it can get you, you kind of have rose-colored glasses when you're looking at the home inspection because you just want it to work out because you've already done the analysis to say, hey, this property can get me this amount of income versus this mortgage payment versus this management fee versus these taxes and interest. So this property is going to work.
Hmm.
So there's some times where you have to actively fight to like look at the inspection results objectively and be willing to let go if it's something that can't be negotiated out of like the purchase price if there's significant repairs needed or what have you. Another example would be appraisals, determine the value of the home. I've had to pay attention to who's ordering the appraisal because, if the lender is ordering the appraisal, then I have to remember that it's in the lender's best interest to like make sure that they're not giving me more money than the property is worth. So I have to keep that mindset in my mind of like, okay, the motivation of the appraiser, he works for the lender. They may value the property um, based on that motivation, like, you know, that they don't want to give more money than the property's worth. And yeah, I mean, there are times where if I've worked with someone before, like a realtor, a property manager, a lender, and I've had a good experience with them, I start to believe that they're a great person to work with in the future. But that's not always the case. Like right now, I'm having a hard time because there are people that I like that I'm comparing loan estimates with. And I have loan estimates from four different lenders, and I'm only going to choose one, but I like all four of the people. So it's, I would say the bias in this is, I believe that that person would give me the best deal because I like them and they seem to like me. But I'm coming to find that the data is pointing otherwise, that I'm getting the best deal from someone I didn't expect. So I've had to fight to avoid, like, fight against that belief that I'm always going to get the best deal from this person who talks real nice.
Yeah, most definitely, man. You got to definitely think about that. And people really will use that as a way. It's like, oh, I've been working with this guy, for years now. So you got to believe that I'm going to give him the best deal and he's not going to shop around for anything else. Yeah, that confirmation bias can definitely kick in right there. And yeah, so yeah, pretty much, I'm gonna close it off for this particular podcast, and we're gonna keep it short. But there's definitely some other topics we can definitely discuss within this psychology of investing. I think we hit on a lot of awesome topics for today. So I want to greatly appreciate you, Romain, for coming through. And as usual, what is your goals for our next podcast? And yeah, see what we can do for goals for next podcast.
Goals, I guess for myself would be to successfully close on this transaction that I'm trying to make without being broke.
Okay.
And then I guess for the podcast itself would be to, I guess, gain more awareness of what the people around us are interested in that we can help them with. Because between you and I, we both have significant experiences with investing, but I want us to use what the experiences that we've had to actually help, people who are interested in stepping out in the brave world of investing.
Oh yeah, man, most definitely. Share the podcast, man. Share the YouTube channel. You got to get more people to come to subscribe to this channel, and I'm gonna do the same. I'm gonna do the same. Yeah, and as far as goals for me, I would definitely say, let's see, I'm gonna keep going with the previous goal. Continue to market this podcast out here, and yeah, share this information, and also continue to gather more information on what people will want to talk about, family, relatives, friends, and so on. I also want to present that I actually finally launched my deal analysis app, and the website, the landing page to purchase it is at dealanalysisapp.com. Yeah, it's really, really awesome. And, put in my whole entire tech career in this app.
Nice, nice.
Yeah.
That's what's up.
So yeah, I'll probably share that in the link below. Other than that, have a good night.
All right. Good night.
All right. Love you, man. Peace.
Love you too. Peace.